I started trading 7 years ago, and it took me 3 years to learn and perfect how to scalp profitably. Fast forward to now, I trade less than 90 minutes a day and have had consistent results for the last 3 years. In this video, I'll teach you why you don't need a complicated trading strategy or to sit in front of the markets all day hoping to win trades. Instead, we will go over everything I learned in the last 7 years, from the lessons I learned losing trading to the simple strategy I used to become a full-time trader. And then I'll show you real examples using the system I teach you in this video to show you the strategy work in real time. In this video, we will go over everything I've learned in the last 7 years, from the mistakes I've made to the key lessons I've learned in the last 7 years. And this way, I'll explain everything I know about scalping. And like I said, the goal of this video is to simplify how to scalp trade. Now, before I talk about the strategies I use to scalp trade, we need to understand the basics of scalping first. So the first thing you need to know is we are trying to catch quick movements in price. As a scalper, we don't want to sit in front of the markets for hours looking for trades. We want to look for moves that happen quickly and effectively, because when we're scalping, this is simply faster trading. So we don't want our trades to take hours and hours, but rather we want to be done the day a little bit quicker. Number two, we want to catch the big move, not the full move. So because we're looking for quick movements in price, when a stock is consolidating, that is not something we want to trade. We want to trade very strong uptrends, and when we have an impulsive move, that's what we want to catch. For us, we're not trying to catch the absolute bottom and then sell the absolute top, because as a trader, it is very difficult trying to predict the markets, and that's not our job. Our job is to simply react to the price action that we see. And finally, number three, we want to be done the day early. This means that I don't trade all day. I don't stay in front of the markets from 9:30 a.m. when the New York Stock Exchange opens to 4 p.m. Eastern. I only trade for the first 90 minutes of the day, and this is because that's when the most volume is in the markets. And for scalping, like I said, we want to catch those big moves, and therefore we want to be done the day early. So a couple important rules you need to understand for scalping before we get into the strategies. Rule number one, because we are trying to catch fast moves in price, we need trending markets, and that's going to be the uptrend and downtrend. As we can see here, an uptrend is simply defined by a stock that has a low. We create a high on that stock, and then the next low is higher than the previous low, and this continues to the upside as we move up with higher lows and higher highs. A downtrend is characterized as a high. We then create a low. The next high is lower than the previous high, and this keeps making lower lows and lower highs. And finally, for scalp trading, we don't want to focus on sideways action, as this is range action and you're not really going to capture a big move. And this is simply when you have equal highs on the top and you have equal lows on the bottom. Rule number two, because we are looking for big moves and not the full move, we need liquid stocks to trade. Now, this could be SPY, QQQ, Tesla, ES, NQ if you trade futures. If you trade Forex, those instruments are extremely liquid, so you're fine there as well. For crypto, the safer options would be trading BTC and ETH, as those are liquid and they move as well. And once again, for stocks and options, I personally trade options and futures. This would be Tesla, Apple, Nvidia, and really names that have big volume behind them. And the reason we want to do this is when there's more volume on a stock or volatility, the more aggressive the stock will move, either to the upside or to the downside, and therefore we can capture a bigger move. And finally, for scalping, you want to be done the day early, because when the New York Stock Exchange opens from 9:30 a.m. to 11 a.m. Eastern, this is when the most volatility and volume are brought into the markets. After this, the volume will slowly start going down throughout the day, because historically at market open, this is when the bigger hedge funds and institutions are either buying or selling their positions. And because of this, if we want to catch those bigger moves, 9:30 a.m. to 11 a.m. Eastern is when you want to trade. Now, for me, everything revolves around one system. This system is called the break and retest. All this means is when you see a stock, in this example, the stock is in an uptrend because we can see a low here, we create a high, we create a higher low, and then we break above, creating a brand new high. Well, this previous resistance that we had earlier, this resistance will now turn into support, because this is where sellers because we're first being aggressive and holding the stock below, but because we know we're in an uptrend and we broke above it, well, where do buyers have to step in? Buyers have to step in near this previous resistance, which is now turned support, because this is also going to put in the next higher low. So from this previous low, this is the next higher low and the lowest risk entry for us on this trade. You can see the break, you see the pullback, retest back into this level, then you see buyers step in with strong confirmation candles. Once you see the strong confirmation candles, then you can target high of day and continuation, and you can see with the break and retest, this works really well. So this is the system that all my setups revolve around, but what are the 3 profitable scalping setups that I personally trade? So for the first setup, this will be the 5-minute or 15-minute opening range strategy. All this means is we're going to mark out the 5-minute low and we're going to mark out the 5-minute high. We can then see exactly what I talked about in terms of my system. We see that this was previously resistance, buyers stepped in, this is the breakout level. We then have to pull back to create what? A higher low, because we created a low down here, we created a higher low here, and this is of course the third higher low. We enter on the retest with strong price action right here. Once again, if you don't understand price action, I have a full free playlist going over everything you need to learn to start day trading. The link is in the description so you can watch it after this video, but you can see when buyers step in, this is where we would enter, and this one had a 3R multiple. All this means is for every $100 of risk that we had on this trade, we would make $300 of profit. This is because of our risk multiple on the trade. I personally like to go for at least a 2R multiple. This means for every $100 of risk, we would be looking for 200. And as you can see, this one worked very nicely. And of course, I'm going to be showing you a much more in-depth example on the charts when we get into the examples. For setup 2, we can be looking for the previous day high and low strategy. We're going to mark out the previous day low and we're going to mark out the previous day high. For me, the previous day high and previous day low occur from 9:30 a.m. Eastern to 4 p.m. Eastern. So that's what I mark out. And as you can see, the next day we then broke above very aggressively. And where would we need to retest? We need to retest the previous day high. As we broke above it, we also see very strong uptrend from the previous day and another impulsive move on the next day. And therefore, we're now waiting for strong price action. You can see when buyers start stepping in on this green candle right here. This is where we enter with the risk right below this previous red candle and our profit target at high of day. And this one worked out nicely as well. And finally, for setup 3, this is the pre-market strategy. Now for pre-market, all we're going to do is mark out the pre-market high and the pre-market low. For pre-market high and pre-market low, this occurs from 4 a.m. Eastern to 9:30 a.m. Eastern. That is the pre-market session. And what we want to do is wait for the same setup that everything revolves around. We see buyers putting in these higher lows. We then get the breakout. And then where do we need to retest? Well, we need to retest the pre-market high. You can see buyers stepped up aggressively here. We would enter with the risk right below the candle and profit targets at high of day or at least a 2R multiple. And this one worked nicely as well. So now that I've shown you the 3 simple setups that I trade on a consistent basis, I want to show you the real trading examples on the real charts using these setups. And this way you'll be able to see how these setups work in the real markets. All right, so on this first example, we're on Tesla. And on this example, we don't need to mark anything out before the market opens. We can see the market's going to open at 9:30 a.m. Eastern. We're on the 1-minute time frame, but we don't have to mark anything out because we're going to be trading the 5-minute strategy. So we wait for the first 5 minutes to develop just like they did here. And we want to mark out the 5-minute high and the 5-minute low. Now, just like I showed you when I was explaining the strategy, all we're going to be looking for is a break above, a retest, and continuation if we want to break above, or if we want to break below, we need to break below the 5-minute low, retest, and then continuation for the downside on this name as well. So with this being said, let's play out this trade and let's see if we can get a break to either side. Okay, so right here, we can see we broke above. We're coming back for the retest. Now, is this a strong retest? Well, we broke above the 5-minute high, which is important. We then came back for the retest, which is where we would enter. And here on the retest, we can see a strong lower wick candle, which indicates to us that buyers did step in and this stock is bullish. And therefore, this is a good retest for continuation to the upside. Now, the way we would play this trade is our stop loss is simply a break below this candle right here that we're entering on. on, and we need at least a 2R multiple or high of day, which means for this trade right here, high of day gives us about a 2.11R multiple, which means for every $100 of risk, that would be $211. With that being said, let's enter into the trade here and let's see exactly what happens. So right away, you can see buyers stepped up very, very aggressively on this name. Within about 4 minutes, we would have already been done the day with a brand new high right here. And this day, we were done the day at 9:45. We would have already been done the day within 4 minutes using the 5-minute strategy. Now, this strategy works especially well when there's a lot of momentum or the stock is pushing very strong right into the open. Now, with that being said, this is a 5-minute setup, and this is the exact setup that I traded live in front of hundreds of traders in the accelerator, and they were able to see exactly how I execute in real time. So this was the 5-minute strategy. Now let's go over to the pre-market strategy. Now here we're going to talk about the pre-market strategy. Now on the previous day, you can see we were consolidating. Now, of course, we're opening up pre-market above the previous day high. And with the pre-market strategy, this works well when you're gapping up or gapping down in the markets. And all a gap simply means is when pre-market, we are opening up above the previous day high. Therefore, on the daily time frame, there would be a gap into the previous day high. And all this means is buyers are stepping up aggressively into pre-market. Now for the pre-market strategy, we're going to mark out the pre-market high and the pre-market low. Now let's see which way this stock now breaks. Okay, so right away, this stock is breaking the pre-market high with lots of buyers stepping up. This shows that buyers stepped up aggressively, and therefore the retest level we would be looking for is the pre-market high retest. What we want the stock to do is simply come back into this area, show that strong buyers are stepping up, and then we can look for continuation back into high of day or whatever gives us that 2R multiple. So let's keep playing out the trade. And right away, we got 2 big candles. Now, this is where you need to understand price action, which I have a full free video in the playlist in the description. But with this being said, this red candle is an indecision candle. This simply means that buyers stepped up into this new high and then sellers brought it all the way down. However, overall, this candle was very, very neutral. On the next candle, sellers stepped in trying to break it below the pre-market high, but buyers stepped up and closed it above pre-market high. Along with this, we have a very strong lower wick with the candle closing green as well. So this is where we could enter into this trade as buyers did step up into this area. Our stop loss is going to be a candle closure below the candle we're entering on. And the target of high of day is simply a 1.32. Like I said, we need at least a 2R trade. Therefore, for us, we can simply target the next whole psychological number, which is going to be 147. This would give us about a 2.45 risk to reward trade. Let's enter into a buy position and let's see exactly what happens. So far, we're still holding that pre-market high. Just like that, buyers did end up stepping up. We had to hold through a little bit of consolidation, but the pre-market strategy held very nicely and moved to the upside. And this setup is very simple to follow, especially if you're gapping up or gapping down in the markets. So this was the pre-market strategy on Nvidia. Now let's go over to the previous day high and low strategy. Okay, here we are on the final example. Now on this one, we're on Meta, but we're on the daily time frame. And this is because we're going to talk about the previous day high and the previous day low strategy. Now for the previous day high and previous day low strategy, what we need to do is mark out the previous day candle. So on the daily time frame, we're going to mark out the high and we're going to mark out the low of the previous day. And now we can go to the lower time frame. And on the 1 minute here, you can see we of course marked out the high and low of the previous day. And pre-market, you can actually see that we're rejecting the previous day high already. But for us, that's simply noise because we're still in between the previous day high and previous day low. We'll only be looking for a setup when we break above the previous day high, retest for continuation to the upside, or we'll be looking for a setup if we break below the previous day low, retest, and then continuation for the downside. This way, we avoid any noise in between these levels. So let's play out the day and let's see exactly what happens. So far, we're still in this range. We're coming down into the previous day low. Now we're breaking below the previous day low. This shows us that sellers are now stepping in. And what does this indicate to us? Well, like I said, we need to break below the previous day low, come back for the retest of the previous day low, and then look for continuation. So let's play out the trade and see if we get that retest. And we can see right here a very weak price action candle showing that seller stepped in with a bigger upper wick. So this is where we would look to enter into a short position rather than a long position, because of course this is a trade to the downside, and our risk is simply going to be a break above the candle that we're entering on, and our profit target needs to be at least a 2R multiple. In this example, that would happen at the 692 whole psychological number, the 2.26 risk to reward. That would mean we're risking about $1,800 for 3,770. Let's see exactly what happens on this trade. And we can see just like that, our order got filled at the bottom here as well. And this was a fantastic trade to show exactly how to use the previous day high and low, avoid the noise up here, and catch a nice trade to the downside. Now, with this being said, I have a big announcement coming soon that will help many traders learn how to trade the right way for absolutely free. So if you want to be one of the first few people that get updates on that, there's a wait list in the description. Make sure to sign up for it. Along with this, if you want to deep dive into any of the strategies that I mentioned today, make sure to click the video on screen for much more examples. If you enjoyed this video, leave it a like. Make sure to subscribe to the channel. Follow me on Instagram and Twitter for more education. And I will see you next week with a brand new video.